Something fundamentally has shifted for crypto. In the past, we always had the cycles, right? We had a market that continued to heat up. More and more retail investors jumped onto the asset. And then at some point, we saw the crash because there was simply too much speculative money coming in. Now things are changing. The demand is not anymore retail. It's the Wall Street guys. And Wall Street tends to just buy and hold, at least the institutional investors, the Bitcoin treasury companies, the ETFs, etc. So was this maybe the last bear market that we saw 2-3 years ago? The long-term price chart of Bitcoin might suggest just that. What we've got here is Bitcoin's long-term price that starts in 2010, when Bitcoin was just a few cents, all the way to today. And this line that we see here at the top, that's a resistance line. It's just a curved line that coincidentally connected the cycle tops extremely well. Just have a look at this. With every cycle top, we touched this upper line extremely closely. And now suddenly we are above that line. For whatever reason, we don't see enough sell pressure anymore to bring us to the next bear market. What's interesting though is that this recent rally above the 120K was actually not triggered by Bitcoin. It was triggered by Ethereum. Because have a look at this metric here. This is Bitcoin dominance. How much of all of crypto is in Bitcoin when we compare market caps? And this tends to trade somewhat in a range. So Bitcoin tops out at 73% dominance and it bottoms out at around 38% dominance. Since August of 2022, Bitcoin tends to outperform the rest of crypto. But the recent rally in the last few days, it was not Bitcoin dominance going up. In fact, it went down. It was not led by Bitcoin. Prices went up not because of BTC inflows. Instead, Ethereum outperformed. So what we're seeing here is the Ethereum dominance. A lot of capital moved into Ethereum and we anticipated this, right? This arrow that was drawn over here was drawn quite a while back. And so I do believe there's a good chance that the Ethereum dominance will hit 14%, potentially even 21% at one point. And again, it's Wall Street that's triggering all of this. Have a look at the ETF inflows for ETH. A single day saw more than 300 million purchases through traditional finance. And so there's a gradual shift happening. In the early days, it was all just retail investors, it was the small investors, but many of them that pushed prices up and down. So you could simply just look at social metrics. We could have a look at how much attention is there currently on Bitcoin, on Ethereum, on crypto as a whole, and thus have a gauge of where prices might go. This is now shifting. This is the search volume of Bitcoin over time. And while we did go slightly up with Bitcoin hitting 120K, we are still at a comparatively low level. At the same time, in the last 2.5 years, the number of wallets that have at least one Bitcoin also has not grown. So there's a clear shift happening. The orange line isn't going up anymore, but the Bitcoin price clearly is. And that's because of the ETFs, that's because of the Michael Saylors of this world. They tend to just accumulate. This is a monotonically increasing line almost. And that then begs the question, right? Are we ever going to see a bear market again if those players don't have to sell? Now here's a problem that everybody is faced with. When the price of Bitcoin is going up and up and up, we tend to have more of our overall wealth in crypto. As in, maybe we start out with only 10 or 20% allocation. The rest is stocks and precious metals and property. So you just start with a small allocation. But then when crypto grows that quickly, suddenly we might have 40, 50, 60% of our net worth in crypto. At that point, it might make sense to rebalance a bit. But then at what point in time should we rebalance? When is the market potentially heated? What's a good medium-term exit opportunity? There are several approaches to this. So we've got the 120-day simple moving average. I've run back tests on Bitcoin, and when we follow the medium-term trend, the 120-day simple moving average, this line in turquoise, used to work the best. If it will continue to work as well in the future is uncertain, again, because the type of investor in Bitcoin has changed. But in general, right, when momentum turns around, the price tends to fall below that SMA. And so the simple approach is to just keep on holding Bitcoin until we fall below that SMA, which currently is at 98K. Another approach is to look at how much short-term speculation is there currently in the market, or how much dry powder is on the side. Dry powder meaning stable coins. So how many stable coins are currently not deployed, relatively speaking? Because in general, the stablecoin market cap, of course, is going up. as in money is flowing from traditional finance into crypto. And that started in October of 2023, right? After the collapse of Terra Luna in 2022, we saw the stablecoin market cap shrink. And then in October 2023, we saw it expand again. And we continue to see that expansion. So that's clear. But how much of all of cryptocurrency's market cap is currently in stablecoins? That's measured with the stablecoin dominance, and that's currently at 6% roughly. And it tends to trade somewhere between 9 and 5%, at least for the last 1.5 years. And there is an inverse correlation. So what we see here at the bottom, that's the Bitcoin price. When the stablecoin dominance is low, it means many people are deployed in risk-on assets. Many people own altcoins and Ethereum and Bitcoin, and not so much risk of stablecoins. So when this is low, people don't have a lot of dry powder. We see temporarily at least a top in the crypto prices. When this then turns around, right, for example, over here, when the stablecoin dominance is very high, that's when people are rather risk off. A lot of dry powder on the side and a temporary bottom in the price, right? This was a drop from 72 to 53K, 26% roughly. Then we see the rally again in crypto prices. That's then again when the dominance drops and the Bitcoin price rallies. And so it goes on from risk on to risk off to now gradually becoming more risk on again. And so that's, I believe, a very nice approach as well to time potential exit opportunities. When the stablecoin dominance is close to 5% again, it might make sense to at least temporarily take some chips off the table if you're currently over allocated in your portfolio. If you don't want to have as much crypto allocation anymore because you've already made so many gains, exiting parts of the position when the stablecoin dominance is at 5%, I believe makes a lot of sense. And of course, I will make a dedicated video once that happens. So if you don't want to miss that video, then feel free to subscribe over here, right? I publish videos regularly on this channel. So this is one useful exit signal, right? We've got the stablecoin dominance. We've also got the 120-day simple moving average in Bitcoin. But then we can also just follow what other smart people are doing. What we've got over here is the long-term holder supply change. So the long-term holders tend to sell when the Bitcoin price is high. They tend to buy when the Bitcoin price is low. They sold again at around 100K when Bitcoin price was high. And interestingly enough, recently, they still bought Bitcoin, even though we were comparatively high. But now they start selling again. So if the long-term holder supply change is again at similar levels to March of 2024 or December of 2024, when we are down here, it might make sense again to de-risk. A similar approach is the value days destroyed multiple. This turns red whenever the long-term holders sell. So when the dormant Bitcoin suddenly gets reactivated again. It's not necessarily the perfect top signal, so it tends to signal a bit too early, here at 40K, when Bitcoin subsequently went up another 50%, or over here at 72K, when Bitcoin now, of course, went higher as well. But in general, right, if you're just looking for potential exits to rebalance, if we don't mind too much to not perfectly pick the top, the value days destroyed multiple is quite useful as well. There are all those different approaches and they measure different things, right? How active is the trading? What are the long-term holders doing? How much dry powder is on the side? It's all very different indicators, but I actually believe that all of those indicators will flash at similar points in time. So very likely we are going to see the long-term holders selling at the same time when there's a lot of trading activity, at the same time when a lot of dry powder has already been deployed. I do believe that there is a lot of correlation between those signals. Now, all of those indicators with the recent rally tend to trend more towards selling, but they're not yet at the historically extreme levels. So I do believe it's very likely that Bitcoin will hit new heights. We're likely going to see 130, maybe 140K. I'm simply going to continue to watch the numbers and then of course also make videos here. Now, I do have an announcement to make. I always talk about how to bet on relative valuations, right? How some altcoins might outperform or underperform Bitcoin and Ethereum, and how those relative valuations aren't that volatile, right? We tend to see relatively clear trends, and how there's quite a bit of alpha to be made with this, right? We can outperform using those clear trends. The only issue is that for most people, this is a bit too complicated, right? You have to learn the platform, you have to learn risk management, how to adjust stop losses, etc. And so here's now the big announcement. I have launched for a small number of people to just deposit capital into a capital pool and then automatically copy trade whatever I do. The launch happened 24 hours ago for the annual subscribers of premium of this channel. And it's already going well. Of course, there might be some volatility to the downside, but currently we are 1.7% already in profit. Before that launch, I tried this out myself on a personal account. So I started with 40K, moved this to 60K within 2.5 months. And while I don't expect to get the same kinds of returns when moving more capital and when maybe luck isn't that much on our side, I still believe that the strategies we are using will yield long-term risk-adjusted positive returns. So in the early days, I did this all with borrowing and lending platforms with DeFi. Now I moved to perpetual futures, right? Bets on the price. But this relative valuation bet approach, I already do this for almost 4 years. So that's what this chart is showing, right? If I just dollar cost averaged into Bitcoin, I would have gotten this light gray line as return. But instead, I got the black line in return. And here's how I do this. I check for altcoins that have a quickly rising supply, while the demand doesn't grow at the same rate. So this is the example of Balancer. I show this very often here publicly on this channel as well. Of course, there are way more examples that I share in the closed community. But because of that token inflation, relative valuations tend to go up very, very steeply. So this is now Ethereum relative to Balancer. So we go short Balancer, or we borrow the Balancer token, right? We profit when Balancer goes down, and we go long the thing that we believe will outperform. And then we get a chart like this. It's a strategy that works for many altcoins. Just have a look at the overall altcoin unlocks over time. So how much new supply hits the market and how much capital needs to flow into the market just to keep prices stable. This here is weekly unlocks, and it tends to be in the hundreds of millions of dollars every week. Especially this week is extremely aggressive with unlocks. And so this is the return we get, but that happens because this is the actual performance of the altcoin. And this is a chart we see very, very often. Just have a look at your favorite altcoin with high unlocks relative to Bitcoin, relative to Ethereum, and you're likely going to see a chart that goes down quite consistently. Who's getting all the tokens? Who's benefiting from this? It's the founders, it's the contributors, it's the early investors. They are all dumping on retail. So when you're wondering why your altcoin portfolio tends to underperform Bitcoin all the time, it's because of that, right? It's because all those people dump on you regularly. And so that's how we make money as well. We make money when the insiders dump on retail, and most retail investors don't know how to play the game. I made a lot of tutorial videos on the topic, how to bet on relative valuations with perpetual futures, how to do proper risk management with those bets. And then also, and this is the big thing, right? How to provide capital to a capital pool so that every trade that I make automatically gets copied with your funds as well. So that something like this isn't theory, but actually becomes practice for yourself as well. You don't have to necessarily go through all of those tutorial videos and have to do active trading all the time if you don't have the time. If you do want to trade yourself, there is obviously the offer, because I do share my trades in real time as well, right? For example, here, this is the Balancer short that I announced on the 19th of July of last year. So that was over here. Since then, Balancer outperformed Ethereum by more than 116%. And so if you've got some capital, but also some time, then there's the monthly membership, right? You just sign up, you watch a few tutorial videos, and then you can copy trade whatever I do. And of course, also do additional trades besides that. If you don't have much time though, if you cannot do the active trading yourself and you're busy with maybe managing a business or a very busy job, you've got the capital, you don't have the time, then you can also automatically copy trade me. The automatic copy trading feature is available for the annual subscribers. So if you sign up for the annual premium membership, you get a bit of savings as well, but you also get access to the automatic copy trading, which again, I've just recently started. We don't know yet how this will perform, but in the last 2.5 months on my private account, it did pretty well. And very long term with borrowing and lending platforms, it also did pretty well. I can't guarantee that it will continue to work in the future, right? Prior returns are no indication of future returns, as people say. But in general, I try to get the odds in our favor. Right? When everybody dumps on retail, we can still profit from that if we set ourselves up accordingly. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.